Testing 1, 2, 3. Good morning, everybody. Can you all hear me okay? Happy Wednesday. Happy Fed Day as well. It's the Fed meeting today. Perfect. Cool. All right. Well, thank you, everybody. Again, welcome. This is our Set the Market morning call here. Probably going to keep it to about 10 minutes. I don't think there's a whole lot to talk about that takes much more than 10 minutes. But we do need to talk about a couple of very important things. And I'm just actually making another quick note on the notepad here. If you're here for the first time, by the way, welcome. Thanks for being here. And if you could give us a thumbs up like on the video down below, that would be awesome. And please subscribe to the channel. It's free, and you get updated in real time when we go live, when we have new analysis, charts, posts, videos of all sorts on the markets. There you go. Okay, so obviously, today we have a Fed meeting. It's the last one for 2025. It's expected to be dovish, a dovish tone, which is to say that the Fed is likely going to cut rates. And we'll talk about that here first and foremost, and then we'll talk about some stocks as well. We'll look at NVIDIA, which, by the way, has gone sideways for 4 months. Again, if you watch the headlines, that's not what you would be led to believe has been taking place, but here we are. So first of all, let's talk a little bit about rates. And we did talk about this over the past few days, and I think it would be just silly not to be aware. So we have a Fed meeting today. Again, we're going to get some sort of a Fed cut. Is likely to happen. At least that's what's priced in. And if you look at this chart here, this is just the yield of the 10-year Treasury note. You can see we've actually gone from about 3.9, call it 4%, to now like 4.2%. That's 20 basis points of higher interest rates on the 10-year. But the Fed's about to cut rates today. And you might say, okay, well, it's because there's less confidence in the long end, than Japan has competitive bond yields now for Japanese investors, which we talked about here yesterday. But then why is it on the short end too? Well, on the short end, on the 2-year yield, we've come from about 3.45-ish, 3.46, whatever, to 3.6, right? Like, that's still not nothing. And so it makes it tricky. Which is why we took down a lot of risk into the Fed here, not because we think necessarily things have to fall apart, but because I really don't know how this is, what the near-term reaction is going to be and what they're going to say. So I think everyone should pay attention to the bond market here. There's a chart out there that's floating around about, and I'm not sure to what extent I can take this one too serious yet, but for those of you guys that are equity people and you like to draw lines on charts, you might notice that since we had an important lower high back in May of this year, we've been kind of working lower in yields in this sort of channel. And you can see that yields on the 10-year have now broken out of this. I'm not too much of a fan of this, particularly going to Fed, so I don't really know if that matters yet, but it's certainly something worth watching. Okay, so that's heading into the Fed here. Again, rates have gone higher. On the equity front, what's interesting is that we continue to see essentially really boring price action on something like NVIDIA, right? So we'll look at our trend following model here, and what you can see is that NVIDIA is essentially flat, right? So since August, that's 4 months, as I said before, NVIDIA is basically flat. It's in a bullish trend, right? So it's not like it's in a bearish trend that's expected to fall apart, although that can happen. It's just not there now. So again, it's just important to do our own work and use analysis that's agnostic to, what the talking heads on financial media and TV are really trying to make us believe or think. Not only is there usually a narrative, but also remember they might just be wrong, right? Anyone can be wrong. We're wrong a lot, right? That's just part of the deal when you deal with markets, okay? So that's just a quick reminder of that. Also a quick reminder, for example, for the S&P 500, it's in a new bullish trend since August, and that's notable. But we're up 5-6% since August. That's good, right? But again, the talking heads would make you believe that we should have been up 20% or 15%. We're not. Now, listen, can that still happen for the rest of the year? Can we still go up more? We can, right? It's more just trying to put into perspective what has happened as opposed to what the people were trying to make us think. I want to quickly touch on JP Morgan. This is a good one. So if you look at our trend following model, you see JP Morgan here, and you can see it's in a green background color. So the trend remains bullish. But what you'll notice is that we do have these pullbacks. Like yesterday, for example, the stock was down 4.66%, which just basically means that essentially the stock is mean reverting, but it remains in a bullish trend. So we need to differentiate between trend, right, and the short-term trade. Now, speaking of trend and trade, right, our trend following model, which is what you're looking at here, right, remains bullish on JP Morgan. Doesn't mean I need to, it's not a short, it's still a bullish trend. So I want to respect that. We're actually going to talk about this, and Christian, maybe you could correct that if you don't mind. The strategy session is actually at 11 a.m. Eastern today, not at 1. It's 11. So if you guys go into that link that Christian put in there, it's at 11 o'clock Eastern today. We're going to do our strategy session about trend following, how to see when new trends start and when old trends stop, right? And we're going to show you guys two of our absolute favorite capital rotation moves right now in different parts of the market that I think are very, very important for 2026. So we'll take you through that process. If you want to join us in our weekly strategy session, again, it's totally free. You may want to do that by just clicking on that link that Christian typed in, and then putting your name and email address in there, and then you're all set. It's at 11 o'clock Eastern, which is, of course, 8 a.m. Pacific time. Okay. So what else? So that's JP Morgan, that's rates, that's NVIDIA. We talked about the Fed. One thing that I think is noteworthy is financials. Now, I'm going to just quickly go into the absolute chart just for a minute, just to kind of show you this in maybe a different way. We actually really like the way the financials are looking here, and that is largely due to basically interest rate dynamics. I think that financials, I'm not sure there's an imminent breakout, but I think that financials can continue to work higher in the absence of significantly bad news over the course of probably several quarters at this point. One part of the market that's really interesting is small cap financials. So you can look at something like the ticker symbol is P as in Peter, S as in Sam, C as in Charlie, F as in Frank, PSCF ETF. Now this is a longer term chart, and you can see that this particular ETF is now basically back at levels where it was in 2021, and it's maybe potentially trying to break out. So this is one of those parts of the market that we're watching very, very closely, along with, we talked about commodities as well. And again, there's a lot of trend changes happening there, energy, and some other parts of the market. So, our base case remains very clearly that we do not believe that the S&P 500 has a lot of movement left on the upside at the rate at which it's had for the past 10 to 15 years. We believe there's going to be a lot lower returns going forward, maybe 2, 3, 4, 5% at most per year over the next few years. But we do believe there's a lot of rotation taking place underneath the market that could move certain sectors a lot. We saw this year, and we talked about this all week here on the show already, or I guess Monday and Tuesday. We've seen this rotation. In fact, let me see if I can quickly find this chart again. Yeah, here. This is actually the chart that I'm talking about. So let me make this a little bit smaller here. So this is that chart where you can see we've got 3 lines here. You've got the candlestick line, which is commodities. The green line is stocks, or the S&P 500, and then you have metals and mining stuff, which is blue. And so remember, we live in an environment where we have basically a debasement of currency, debasement of the dollar and other currencies. And so what happens is that the financial asset inflation, financial assets are getting inflated because the currency is getting pounded in terms of purchasing power. And so, stocks or growth stocks are typically the first to go. This is the most recent rally that started in 2023 for stocks. And then, of course, metals and mining stuff started going this year. And we think commodities and actually a whole bunch of other things are going to go next. Financial assets tend to inflate when you have inflation, and be directly linked to that, the debasement of currency, right? So this is actually, I'm giving you quite a bit of preview of what we're going to talk about here today in our session at 11 o'clock Eastern time. Again, that's 8 a.m. Pacific. Someone before was asking about Uber. I'm happy to quickly look at that. Now, remember, tomorrow is actually our Ticker Thursdays. So if you guys want to come with more tickers, you will want to do that tomorrow. So Uber, this is the trend follow. I don't know what the question is, if you're asking a trend following or a trading question. So you would need to clarify that a bit more. But Uber is in a bullish trend, right? So this is the green background color. It was neutral trend for a few days. It's now back to bullish trend. Okay, so it's definitely not bearish. It may be bearish from a momentum perspective. In fact, I can quickly check. It's probably choppy in the chop zone would be my best guess. Yeah, I know it's actually still in a bearish momentum phase. So that's the short-term stuff, but it's choppy. Like I personally I need a clearer signal right now on Uber in the short term. But it is for whoever was asking before, it is still in a bullish trend, right? So that hasn't changed. Nicholas is asking, is there a ticker to trade commodities as a group? Yeah, there's a lot of them. DBC, there you go. William's asking, DBC is one of them, right? I want to be very clear. Our call on commodities is not a trade. It's an asset allocation, right? Now, if you're a Blue Marlin client, you know that this is an asset allocation thing, not a trade. There will be trades along the way, right? And as the trends change, we have a lot of them already happening. The energy space is very interesting. We'll talk about that today at 11 Eastern, 8 a.m. Pacific. I think if you're looking at the commodity thing as a trade for a few weeks, a few days, you're probably going to make very little money. If you look at it as an asset allocation for a multi-year time horizon, you might make a lot of money. That's just my view. It's not advice, of course, right? That's really, really important to understand. Commodities tend to be mean reverting. I know that's a term that a lot of people haven't learned because we haven't had a lot of that over the past 10 years. But when they trend, they go like crazy. I mean, look at gold, right? So we talked about gold. This is gold from a trending perspective, right? The green background color. So the green background color started in January 2024, and gold so far is up 106%. Silver, that trend started back in, the true one started back in January 24. Then it paused for, I don't know, a week, 2 weeks maybe, and then it went again. In total, silver's up 135%, right? So this is the power of trend following. So we need to be aware when new trends start, major ones, but also when they end or they pause. And most people don't do that, which is why they tend to underperform and not stick with something. I know a lot of people that like the idea of being long silver but never got long. And if they did, they're getting long now, which is just a bit silly when the trend really started in earnest in April of 2024, even though it paused for a few days, maybe a week or two back in December of last year. Okay. So anyway, folks, I hope this has been helpful. I'm going to wrap it up here, and we'll see hopefully most of you at 11 o'clock Eastern, 8 a.m. Pacific today to look at a lot more of these really juicy parts of the market that are rotating. Again, this is our weekly strategy session. And tomorrow for Set the Market, so this show here in the morning, it's going to be Ticker Thursdays. So look forward to taking any questions you have and see how we can help you navigate through the market. And of course, tomorrow will also be post the Fed. So I'll have some more information on that as well. So thank you, everybody. Have a good trading day. I would expect today to be a bit choppy. I personally am very careful. I'm probably not going to do anything today at all unless there's something really wild happening after the Fed. But I think today is a better day to kind of sit it out. So from a swing trading perspective. So anyway, all right, folks.